And this is all very similar. Rick Rule will remember very vividly the 2005 to 2007 bull market in uranium, where the very same conditions were present at that time, and we went from $10 a pound uranium to $137 a pound uranium. It feels like we're going through the same cycle right now.
Today's guest is a supporting sponsor of Liberty in Finance.
Welcome back to Liberty in Finance. We have a first-time guest today. This is Scott Melbye. He's the president and CEO of Uranium Royalty Corp. He joins us this first time today, this Thursday, July 8th, 2021 on Liberty in Finance. Scott, thanks for coming on.
Great, Dunnigan. It's a pleasure to be on with your listeners and viewers and talk about green energy revolution and how nuclear energy fits in that.
Yeah, I want to ask you about that because we've had other industry insiders talking about copper or rare earth metals or platinum or palladium group metals that might be used for catalytic converters or fuel cells, that kind of thing. But Rick Rule, among others, has kept bringing up uranium. And as a lot of what he talks about, he says you'll either be a contrarian or you'll become a victim in natural resource investing. Uranium has been out of favor for quite some time, and people who had been invested in it or interested in it earlier may have lost that interest. But that's the time when nobody's interested, that it's a great time to consider it from a contrarian standpoint. So we'd like to talk with you about that. Also, our viewers are very interested in ways that they can reduce risk to their family's finances. And one of the things that they want to do that is by investing in things that are real, things that actually are not just profitless paper companies that don't actually have anything real going on. But Rick Rule, in talking with us about the importance of natural resource investing, has said that to people who already have like a foundation of cash liquidity and bullion liquidity, and now they want to dip their toe into investing, to consider royalty and streaming companies. So we're definitely going to ask you about why royalty and streaming companies, what about Uranium Royalty Corp, that sort of thing. But if we could first talk about uranium in general, the overall energy environment we find ourselves in, the big picture, we've seen in the last year, we've seen petroleum go from, over $100 a barrel or $70 a barrel down to negative whatever it was, and now it's back up to $75 a barrel. People have been talking furiously about the need for sustainable or renewable or at least energy sources that are not already past their peak. So can you talk to us about the big picture on energy and whether uranium is destined to play a major role in the green new electrified economies of the future? Yeah,
well, absolutely. I think you touched on uranium as a commodity, and having gone through a very difficult, long, and deep bear market cycle, which began around the time of Fukushima and has only really come out of it in the last year or two, where we've seen the nuts and bolts of supply and demand fundamentals respond the way any commodity would if it was beat down that low and that long. In terms of demand for uranium, it's fuel for nuclear-powered electricity around the world. It's now 10% of global electricity. It's a third of all carbon-free electricity around the world. In the United States, it's 20% of our electricity generation, but a full 55% of our carbon-free energy. So, what we've seen around the world in this sort of mega trend towards cleaner, greener energy sources and, turning away from other fossil fuel generated sources of electricity is nuclear power in a very robust growth mode. So today, if we look at the last 8-9 years, we've seen 55 large reactors come online around the world, and we've got another 51 reactors under construction. And I think that surprises folks, because they would think that nuclear power is perhaps declining or stagnating, and that's definitely not the case. The growth is quite robust. I think, frankly, because as a society, we have very few options. If you're going to make it hard on gas, oil, and coal to generate electricity, which is the lion's share, especially coal, is the lion's share of energy generation around the world today. If you're going to make it difficult on those sources of supply and you're going to favor carbon-free, well, everyone thinks of that as being wind and solar. Well, wind and solar is fine, but wind and solar, only can produce at best 25, 30% of the time in the best of circumstances. So as a society, we have to do something about the other 70% of our energy demand. And we also can't forget that energy demand is going to grow. It's going to grow just on the virtue of us coming out of a global pandemic and industry kicking back into high gear again and consuming more electricity as residential and industrial consumers, but also the electrification of our society, where if it's just the computerization of everything we use and do, or transportation with electric vehicles. I mean, Elon Musk expects that we'll probably see a 50% increase in energy demand just from the rollout of electric vehicles going forward. So nuclear energy being a baseload, reliable, clean, carbon-free source of electricity really fits in this narrative. And we're beginning to see, for the first time, more public acceptance. We're seeing 76% acceptance rates or favorability rates towards nuclear power today. Wasn't that long ago where it's always been kind of a 50-50. Either people loved nuclear or hated it. Politically, we've always seen the Republican Party in the United States support nuclear energy as part of an all-the-above energy strategy, whereas Democrats oppose. That's very much changed now, and I've seen it firsthand in testimony I've given to the Senate Energy and Natural Resources Committee earlier this year, where I sat in front of Democrat and Republican senators who are all very interested in how nuclear energy can help reduce our carbon emissions, but still provide the baseload reliability and affordability of electricity that we need in the United States and elsewhere.
One of the things you mentioned along the way astonished me. You said some people are astonished by that. I was astonished by the statistics you mentioned about new nuclear reactors coming online, because for the longest time we've been told, and this echoes something that we've heard about, for example, precious metals exploration and mining and development, is that there's been this decade of neglect of investment in exploration and development and mining, and so that there's expected to be this big lag or shortage. I've been told that the permitting process has often been so lengthy and extended for new nuclear power plants that there haven't been any permitted in decades or whatever. So those numbers you quoted, were those U.S. or those global? And what is the trend or about the delay that it takes to permit new plants? And is the reawakening of the nuclear generation industry going to be able to keep up with that increase in demand? Yeah,
well, the numbers that I quoted are global. So we're seeing the most growth occurring in countries like China, India, Korea. We're seeing in the Middle East, the United Arab Emirates, Turkey. The UK is transitioning from their older generation of reactors to modern reactors. In the United States, we're only building two very large nuclear reactors at the Vogtle site in Georgia, near Augusta, Georgia. But we are now moving to what I would call an innovative step towards advanced and small modular reactors. I was at an announcement 4 weeks ago in Cheyenne, Wyoming, where Bill Gates TerraPower, which is one of these advanced reactor companies, Bill Gates very much believing that we have to do the math and science when it comes to energy. We can't rely on wind and solar, which are only an intermittent source of supply. We need to have power 24/7 and more of it going forward. So he developed TerraPower to really fill this gap of advanced reactor technology. He's selling a 345 megawatt reactor to his friend Warren Buffett, who is the chairman of Pacific Corp and Rocky Mountain Power in Wyoming, where they're going to site this reactor on the location of a retiring coal-fired power plant in one of 4 communities in Wyoming. So I think in the United States, we haven't seen as rapid growth as they've seen in other parts of the world, but I think that's only by virtue of us having such abundant energy supplies compared to other emerging markets, where they're just basically trying to get up to a standard of living that barely approaches what we enjoy in the West. But our energy needs are growing in Western Europe and the United States, and I think you'll see, if not big reactors being built, certainly the small modular reactors may be a better fit in grids like ours, where we've got to compete against cheap natural gas and coexist on grids that are heavily dominated by intermittent power, which is a real challenge for those who have to distribute and generate power and do it without blacking out cities or regions. So nuclear is really fitting the narrative on both public policy, consumer preference, and the technical aspects of delivering and generating electricity today.
Now, you mentioned Fukushima disaster in passing there, and you also mentioned in passing traditional resistance by the Democratic Party against nuclear power. Some of the concerns, which are well known, are just basic safety of the actual operation itself and the potential volatility of a reactor by itself. Secondly, there's been a concern about the holistic life cycle about the spent fuel and long-term storage. So with an increased emphasis more than ever on ES&G considerations in many of the natural resources, what changes? Like you've mentioned several times the term new generation reactors, that sort of thing. What is new and different that people should be aware of? I'm not, about today's reactor technology or designs that are being installed in all these countries that you mentioned, or the storage plans for spent fuel that people should be aware of that may be winning over some of these green energy advocates? Yeah, well,
one of the a core component of these advanced and small modular reactors that are being advanced today is are there safety features, inherent safety features, and I'm always reluctant to say that these designs are even safer than the existing designs, because then it would imply that the existing reactors have unacceptable risks, and that's really not the case. And if you look at the amount of fatalities measured by the millions of gigawatts, of the megawatts generated over time, nuclear energy still is the safest form of energy that we know today. It's even got a lower accident and fatality rate than wind and solar, albeit very, very similarly safe technologies from that regard, but much safer than, say, oil and gas or coal in terms of their impact on the environment and also the public safety. So I think nuclear has done a very poor job of communicating how safe nuclear is. But I guess it's like airline travel, where there's people that have irrational fears towards airline safety when, in fact, it is the safest form of transportation we know today. In terms of waste, I think the nuclear energy industry can be quite proud of its accomplishments in terms of waste, because unlike other industries, we've kept every gram of spent nuclear fuel and waste that we've generated since the beginning of commercial nuclear power in the 50s. And I know it sounds like an overwhelming task to take and deal with that waste, but the volume of that spent fuel in the United States since the 1950s, that spent fuel would fit on the size of a football field. So we're not talking about an insurmountable problem. Thank God it's not been pumped into an ocean or stream or pumped out of the smokestack like a coal-fired power plant. We've actually kept our fuel and are managing it. Now we have two options. We can either bury it in a permanent geologic repository. There are geologic formations around the world and in our country that are more or less unchanged for millions of years. I'm pretty certain that can be a stable and permanent repository for spent fuel. But we also know that in other countries, and probably it's just good practice, that we should always look to recycle. And the spent fuel still has 80% potential fuel left in it. So I think our industry probably will go down the route of sort of a monitored retrievable storage, where the fuel is stored in a common site, but able to be retrieved when 100 years from now we're needing all the energy sources that we can go to and recycle that spent fuel into fresh fuel assemblies going forward, like it's done in France today.
I wanted to touch on something that's also an analogy that our viewers will be very familiar with, and that's the silver squeeze that we've been experiencing. And so the reason I bring this up is because when we interviewed Keith Neumeyer from First Majestic Silver with Rick Rule, they talked about this massive metal shortage coming, that the demand from the green new economy as well as just other demand is going to far outstrip the available supply of many metals in the near future. Uranium is perhaps one of those because of the energy needs, as you mentioned, for the electric economy. But the silver squeeze has been a phenomenon quite a bit in the news. I lived through part of that in January 31st of this year at the closing day of the COMEX month when the market basically blew up, and there was such a scramble for physical metal that there were critical shortages all over the silver supply chain on major exchanges and funds and so on. There's been talk of, like, for example, Sprott starting a new physical uranium fund, and there's been quite a bit of buzz and chatter around the fact that this might be like uranium's moment for people to realize, oh my gosh, there isn't enough physical to go around. And when we had Amir Adnani on talking about strategic preparations that countries, the COVID crisis has wakened many countries up to the fact that it was so cheap to outsource offshore our dependence on many, whether it's medical supplies, but in this case, natural resources, that it suddenly became glaringly clear when the supply chains locked down that you either had it or you didn't. So can you talk to us for a minute about two things? One is the strategic resource nature of uranium, specifically from countries. And then secondly, this idea of, are we facing the foothills of an imminent cliff of demand, a wall of demand, basically, that's going to be likely to generate the kind of a squeeze we've seen in physical silver recently?
Sure. Well, Dunnigan, this is the exciting investment thesis in uranium, in that, we just got done saying how nuclear generation and uranium demand has frankly recovered to pre-Fukushima levels. So the need for uranium is significant and growing. But on the supply side, on the uranium mining, we've gone through an 8 to 10 year bear market where there's been very little investment in new mines. The exploration cycles have been missed. And, even with the uranium price almost doubling from where it was from 2016 to today, from around $17 a pound to around $33 a pound today, it's still below the incentive cost needed to bring on new mines, even the best new mines around the world. So what we've seen it was a bit of a delayed reaction, because uranium, unlike copper, gold, silver, we're much more of a hedged market. We're not a spot market-driven commodity. So we had a lot of producers that, had contracts at $40, $50, $60 a pound, which were sustaining operations around the world, but the spot market for uranium was under $20. It wasn't until those contracts rolled off in 2017 till today that miners are now faced with the low spot price. They've shut in production. That's amounted to about 40 to 60 million pounds a year over the past 4, going on 5 years now. In a 185 million pound global uranium market, 40 to 60 million pounds of lost production is pretty significant. We've also had kind of exacerbating that is the financial players and speculators that are now coming in. And this is all very similar. Rick Rule will remember very vividly the 2005 to 2007 bull market in uranium, where the very same conditions were present at that time. And we went from $10 a pound uranium to $137 a pound uranium. It feels like we're going through the same cycle right now. But, some of the speculative demand, you touched on it. Sprott, Physical Uranium Trust, is being launched. They've basically done a merger takeover and of Uranium Participation Corp, which is the largest physical uranium holder, sort of a physical uranium ETF that allows investors to speculate on the pure commodity. No mining risks, no country risks, just the physical commodity. Sprott coming in and wrapping that into their physical trust concept that's been so successful in gold, silver, copper, really will, one, create an attractive investment vehicle for those that just want to speculate on the commodity, but it'll also inject a lot of capital, hundreds of millions of dollars, into our market to buy and segregate even further uranium off the market. Why is this significant? Because just like the producers' contracts have rolled off in recent years, the consumers, the electric utility companies, have seen their contracts fall off. But they weren't so eager to jump back into long-term contracts like they did in the last cycle. They signed record volumes of long-term contracts in 2007, 8, 9, and 10 at the highest point in the uranium market. They were happy to kind of get out of those contracts and just live off the spot market or the short-term carry trade market. Well, the winds are changing in terms of the supply side and demand, and the utilities are realizing it's time to come back and contract under normal volumes of long-term contracts globally, and that includes the Chinese. And that's what's interesting, that all these, if you want to call it a supply squeeze, is happening at a time when the utilities are now just coming back to the market. They're the ultimate consumer, but we've already begun to see the market drained of a lot of the excess supplies and secondary market supplies that have kind of met the gap between production and consumption over this last 4 or 5 years.
So within this background of neglected development, burgeoning demand, shortage of supply, where does a royalty company figure into this? Because we've been introduced, again, primarily by Rick Rule, but we've interviewed several royalty companies, gold royalty companies, other copper royalty companies, others where it's quite an interesting business model that most people are not familiar with at all. Most people, they either think, well, I'm owning a mining company or I'm owning the real thing, but can you just hit the high points for us of what makes a royalty company special, why people should be aware of the advantages that provides to investors specifically?
Sure. Well, your resource investors will know very well names like Franco-Nevada, Wheaton Precious Metals, Sandstorm, Gold Royalty, Metalla. These are all part of a $50 billion industry in base and precious metals that have filled that royalty and streaming niche over the last 10 to 15 years. We were amazed, and some of the co-founders of Uranium Royalty, we were amazed that there wasn't such a company in the uranium space, especially with a looming development cycle upon us now, where billions of dollars are going to need to be invested in new mines and developments around the world. So we set out and founded Uranium Royalty Corp., took it public in December of 2019, and now trading on the NASDAQ as well as of this year, to really provide that type of company in the uranium space. For investors, it provides a pure play investment in the uranium story, but still have the security of a diversified investment. Presently, our company has 16 royalties in our portfolio, and we'll continue to grow that. So one thing that is an advantage is you're not putting all your eggs in one mine or one company's mine developments. You're spreading that risk over a number of them. Another advantage that we have is we own a physical or a financial interest in the future production of that mine or mine development. We're not a full shareholder or owner of the mining facility itself. We don't have to maintain the workforce and the capital cost of maintaining our mine, especially if they're on standby. We have usually a top-line interest in the form of a royalty on revenue. Sometimes it's a net profit interest where we are kind of sharing on the resulting profits. But it's, we're not getting the cash calls if the mine is developed and is shut in for a couple of years because of declining market prices or what have you. We only benefit when the mine produces and don't have any of the downside of having to fund the mine's development. So we're not surprised it's become as big as it has in base and precious metals. For the developers, it's a way to advance their mining operations into production in a way that doesn't dilute their shareholder base through equity raises or expose them to kind of the debt covenants that come with the debt alternatives to build a mine. So we're kind of a third way. We used to be known as more alternative finance with royalties and streams in the commodities business. It's becoming very much mainstream. but it is rather new in uranium. And, we're very excited to fill that niche and really are out there looking to add new counterparties and more exposure for our investors.
You did mention diversification in there. Our channel grew out of a channel called Reluctant Preppers, which was about preparedness, risk reduction. And that's why so many of our viewers now, as we're Liberty and Finance, have such a keen interest in things that are real, that are physical. And you mentioned diversification. You mentioned 16 different streams of operation. How are these geographically distributed?
Yeah, so we, in the uranium business, we want to be present in every major uranium district in the world. So you could generally narrow that down to kind of the Kazakhstan, Uzbekistan region, of which we have interests through our ownership in Yellowcake PLC, which has long-term offtake agreements with the Kazakh National Power Company. We want to be present in Africa. There's both mines in sort of central West Africa and Niger, but also down in southern Africa and South Africa and Namibia. We presently have a royalty with one of the bigger mines that's been in production for a number of years, Langer Heinrich, operated in Namibia by Paladin. So we have interest there. We're very interested in North America. In the United States, we have both conventional mining royalties and we have in situ recovery royalties. I make the distinction because in situ mining has become a real low capital cost, low operating cost method that's allowing American mining companies to compete on a global scale at a lower production cost and compete with big mines in Africa, Canada, Australia, and Kazakhstan. So we have interest in both ISR and conventional mining in the U.S. And of course, in Canada, particularly Saskatchewan, we're very interested in the high-grade deposits up there. One of the leading jurisdictions in uranium in the world today. We have interest in two of the largest uranium mines in the world, Cigar Lake and McArthur River, which are owned and operated by Cameco and Orano. These are mines with ore grades 100 times the world average. And we have royalty interests on both those mines, but other interests as well in the Athabasca Basin and even over in the Maritimes in eastern Canada. So we're continuing to grow that portfolio. We don't yet have something in Australia. We would love to, whether it's South Australia or Western Australia, where there's a number of developments in the works. But we do know that the uranium market today, with demand growing the way it is and production trailing consumption by such a big degree, even with the restart of a lot of mines in Canada, and even Kazakh mines have been cut back 20% over their planned production because of the low uranium price. Even with the restart of those mines or the full operation of those mines, we need an entire generation of new uranium mining developments coming online. And so our company wants to counterparty with the most promising of those and share that exposure with our investors through the royalty and stream exposure.
We love to corner our guests to give us education on different topics. You've just given us a very broad brush of many, many topics, but there was one term you mentioned along the way that I wanted you to make crystal clear for us. You said in situ mining was somehow able to be globally competitive in a way that other forms are not. Can you please give us a clear insight on that just for our benefit of our viewers and myself?
Yeah, it's interesting. I mean, the United States is a great example, but I mean, in situ mining is now greater than 50% of global production. But in the U.S., in the 1980s, we led world production from mines in New Mexico, Wyoming, all across the western United States. But these tended to be conventional deposits mining lower grade ore, usually in sandstone-hosted deposits. What we're doing today is mining those same deposits, but rather than drilling, blasting, creating waste rock, tailings issues, we're actually going into those sandstone-hosted ore bodies, and we're reversing the natural process that deposited the uranium there in the first place, which is essentially a uranium in groundwater in minute amounts, being in an oxidized state, somehow going into a reduced state and forming in deposits. We go in, oxidize the uranium with sodium bicarbonate. It's essentially Perrier water, which removes the uranium off the grains of sand in that sandstone and pumps it to the surface as a solution. So it's a bit of a disruptive technology, which is allowing not only U.S. mines to compete, but has lowered the overall production cost around the world, with over 50% of mines now using this technique. You can't use it on hard rock mines and every type of deposit, but if you have the right geology like we do in the United States, it's really an advantage. And our major shareholder, Uranium Energy Corp, is one of the leaders in the United States and Texas and Wyoming in developing mines using that technique. So as a royalty company, we want to be invested in those, but we also have interests in conventional mines that remain in the U.S. that still may benefit from other things like co-production with vanadium or rare earth minerals that, the value proposition is improved through some of those co-byproducts. But again, it's interesting. It's not a new technology. ISR, in situ recovery, has been around for a while, and it was pioneered in the United States out of South Texas and really developed in Wyoming. But we're using it to be competitive in the United States against other bigger mines around the world.
Thanks. I appreciate that definition. I can just picture that. It reminds me of the percolator coffee pot we have down in the kitchen, the old style where the hot water goes in and goes through the grounds and you get the good stuff out. We want you to, if you will, let our viewers know how they can find out more about Uranium Royalty Corp.
Yeah, so our website, uraniumroyalty.com, is a good source of information. Our major shareholder, Uranium Energy Corp, uraniumenergy.com is another good source of information. If you want to just learn more about nuclear energy, I would encourage you to go on the World Nuclear Association's website out of London, or the Nuclear Energy Institute out of the United States, to really learn more about our market. But again, we're traded on both the NASDAQ as UROY and on the TSX-V as URC. And encourage you to look at, I think, this commodity world that we're in today, where we're needing a lot more of just about everything, and it's getting harder and more difficult to mine those commodities and bring them to market. I think the investment thesis around uranium probably compares as favorable to any commodity around today. So encourage your listeners to take a closer look.
Yeah, we've had several analysts on our show. I'll mention Michael Pinto from Pinto Portfolio Strategies, Gregor Manarino from TradersChoice.net, and others who've talked about the bubble of everything. Stocks are in a bubble, bonds are in a bubble, real estate's in a bubble. They said you need to look for anti-bubbles. You need to look for things that are out of favor. And I guess that just echoes what Rick Rule's always talked about being a contrarian. This story about what the road ahead is going to look like for energy in general and uranium specifically certainly seems to really sound like that anti-bubble after what we've come through for the past several decades. We'd like to make sure that we get a chance to have you back on, because we just barely brushed over so many major areas, but really appreciate you joining us here this first time on Liberty and Finance. And folks, we'll put all of the contact info that Scott Melbye, CEO and President of Uranium Royalty Corp, mentioned in the description of this video. Scott, thanks for joining us this first time on Liberty and Finance.
Great, Tim, again, thank you. It's been my pleasure.